conducted by Mr. Roshan Madawela, CEO and founder of RIUNIT. A round of applause as we welcome him to the lectern.
Context of this effort is that according to many of the global real estate industry commentators, there is an estimated $1 trillion earmarked for real estate investment globally, right? That's a $1 trillion according to Saville specifically, which is institutional real estate investment. If you look at 2025, the emerging market share, that includes Sri Lanka and our neighbors, emerging markets, we are getting a bigger slice of global investment than before. So I mean, most of it goes to advanced economies in Europe and America, and Japan, but emerging markets are getting a bigger slice of international real estate. And the second thing here is that real estate as a asset class preferred amongst investors is increasing and enjoying a growth spurt. There are many reasons for this. We'll try and touch on that during the expert panels. But basically, when there are times of uncertainty, you find that investors go into real estate. And it's that spot between fixed income and equities. People like to invest in real estate. So that's the global setting. And of course, you know, if you talk to fund managers, they'll tell you that real estate globally has proved itself. You look at 2008, what happened when the economic meltdown took place, real estate did okay. It didn't, I mean, when other asset classes fell by 20-30%, real estate might have increased by 3 or 4%. So it is resilient. It's proven itself again during COVID, and currently we're at the precipice of a crisis. We are seeing a new renewed interest in real estate globally, right? Okay, so we at RIUNIT, we're doing research into what these international investors look for in an emerging country, because they make very important decisions on where to invest, right? So in our studies, we cover Sri Lanka, Maldives, Bangladesh, Nepal, Vietnam, and Philippines. For countries like Sri Lanka, we have data that goes back 20 years. For like Philippines, it's just a couple of years, a little bit longer in Maldives and Nepal and Bangladesh. Why are these findings important? Because they're useful for maybe you as investors. Some of you are here, you may invest in projects overseas, right? But also for policymakers. For policymakers, we can help to understand what magnetizes real estate investment in and how we can have policies to attract that. This is the kind of data we've been using. This is coming from one of our subscriptions that goes out to our clients. So we look at the organized real estate sector. We have to be clear, when we talk about real estate investment, we are talking about the organized real estate investors. So here we're looking at apartments, gated housing, and plotted land projects, for example. So this is what we monitor on a monthly basis in our studies. The 3 parameters that we look at, which are critical, is the amount of inventory we have. So how many apartments do we have in Colombo, for example, or in Male or Dhaka or Kathmandu? What is the absorption? So how many of built units are sold? This gives you an indication of how strong the demand is, right? And last but not least, price. So price increment or price decrease in the primary market will help investors to understand which direction is the market going in. Here are some of the most important parameters for investors, according to our research. This is what they look at. GDP is the most important one. A country with growing GDP, a growing economy, represents a increase in the number of people who can afford real estate, right? So the demand is a direct relationship with GDP. Countries like Sri Lanka also have the diaspora, right? So the Sri Lankan diaspora is amazing. We have a high level of engagement. You don't see this in other countries or most countries. So the diaspora who earn money in foreign currency invest back into country of origin Tourism is another one. It's cross-fertilizing. Tourism cross-fertilizes with other sectors. The more people that visit Sri Lanka, the more foreigners tend to be interested in investing in property. It's the case in Sri Lanka, Thailand, Bali, and other places as well. Remittances drives the affordable market. It's a very strong indicator. The more money that comes in from migrant workers, the more the demand is for affordable land and housing. I'll run through this. Infrastructure is obvious. You have great infrastructure, more people want to live here or any country. Industrialization is an interesting one because country that industrialization extends a certain stability to the market. Countries like, if we're an example, we depend too much on tourism, so every time there's the global economy sneezes, we catch influenza, right? So if we were industrialized like Vietnam, we would be much more resilient to withstand international shocks. Sentiments are very important. It's hard to be scientific with sentiments because we don't know how people form them, but I think it's a mix of governance, future expectations, and so forth. Demographics, critical. I think you guys know that people, if you've got a population that has a lot of people in that range who buy houses, then it's a good sign for a market. Institutional factors is something that the developed world particularly looks at when they look at the developing world. They say, okay, you got to have laws, you got to have property rights, you got to have less corruption, you got to have transparency. So that is also very important for international investors. Risk. Unfortunately, we're seeing how war affects international real estate investment. That's happening right now. So this is something which we didn't really factor in, but we have to now factor it in. The fact that international geopolitics can have an impact on real estate investment. And finally, zones and sub-markets. So here in Sri Lanka, Port City is a great example. So Port City alone might put Sri Lanka on the map of an international investor because of the opportunity, the concessions, tax holidays, so forth. So where do we stand? This is a work in progress. Please don't quote us on it. We are working on these. And Sri Lanka here, you can see we score highly on diaspora, tourism, remittances. We're a little bit weak on infrastructure, industrialization. Sentiments vary, but unfortunately we are also a little bit at risk with what happens in the global economy. And that we see all the time. Institutionally, I think things are improving. They could be much better, but we feel the sub-market opportunity, especially with the Port City, puts us back on the map. Where do our competitors stand? So Bangladesh is somewhat the opposite. They have better infrastructure in some areas, but the diaspora doesn't really engage. Remittances play a role. I won't go through the whole thing. Tourism is very strong. Bangladesh, again, remittance is very strong, and they are quite industrialized. Their diaspora doesn't engage, and they don't really have tourists. So it's a different set of variables. Nepal, again, they have huge numbers of people working abroad, sending money back to Nepal, but the infrastructure is quite weak and the institutional situation isn't great. I'll just flick through these for now. Philippines is one of the strongest based on the fact that they have great diaspora, their tourism, they have massive amounts of remittance coming in, their infrastructure is pretty good, and they generally have a decent reputation for laws and property rights and regulations. Vietnam, somewhere where they're quite industrialized, pretty great infrastructure, and you can see today if you go to Vietnam, their property market is doing very well. In fact, they talk about bubbles because it's been rising continuously for such a long time. Finally, just want to wrap up on a few points. Real estate has proved itself as a great investment in an asset class. It's always been there, and in the current time, it's just reproving itself as a good bet. What we'd like to do today is, since we have many people here from the industry, that it's great to see the stakeholders, to try to arrive at, even from the private sector point of view, a policy where we can set the field and bowl to it in a way that will synergize other sectors, between, say, tourism and real estate and other sectors of real estate. If we just secure 1% of the forecasted amount of 1 trillion in global real estate, we're looking at 20 or 30 World Trade Centers, right? So that's quite a significant achievement if we can target that. A final point is that real estate is not industrialization. It doesn't give us perfect stability, but it is an asset. Once a foreign investor comes and builds a building here, no one can take it away, right? So that will stay. Even in a worst case, if you have to use it for another purpose, the asset is here. So it's not like the garment industry, you know, where footloose investment used to come in here, then next year they're in Bangladesh and Vietnam, and countries lose and gain very quickly. No, real estate is a more perennial asset, so it has a value. But let's be clear, we can't measure the country and how good we are by the height of our skyscrapers, which is why our third session is dedicated to how we can make Sri Lankan housing more affordable, have more social housing, more mid-income housing, and have a more integrated strategy that can be driven by high-end for sure, but the benefits should be there for the people of a country. All right, that's it from me.